Okay, part 3 of my video for October 28th, 2018. Stock markets, fun time. Right, I hope my reports have made you money trading stock markets. I've added these to my premium subscription service for free because they're obviously important. The market is moving. I hope they've made you money. I think they should have done because I think my calls have been good. The market has declined. Even if they haven't made you money, I certainly hope they've kept you out of a long position and saved you from losing a lot of money. I know that a lot of traders have lost serious amounts of money. I'm hearing reports of 5-figure, 6-figure losses from some independent traders because they think you can just buy the dip. They've probably never seen a bull market. I've been trading stock markets since I was since 1987, over 30 years, and I've traded every crash and bond market collapse and everything else in that period. So I know what happens when bear markets come about, and you've got to be very careful. I think I said this to you before, but you've also got to be very careful because you get violent moves up in bear markets. You can't really run a short trade in a bear market. You've got to be nimble because you will see big collapses and then you'll get these enormous rallies where it will look like the bull market is back on. They'll last for a day, maybe two, and then the whole thing will collapse again. So these characteristics you've got to be familiar with, and if you're not, you'll certainly have big up days, but you'll have horrendous down days where you can literally get wiped out. So you've got to be very, very careful. You've really got to pay attention to the levels. Right, there's my sermon over with. E-mini S&P, slightly tricky picture. We've got that trend line that I showed you down here, which held. There's nothing else backing it up, so I'm not convinced that that's the end of the correction yet. We're not massively oversold. We got a decent bounce anyway on Friday in the end. So I've got the levels on the report. I'm not going to go over them again. It looks like we can get a recovery, but I don't think we're done yet on the downside. I think that's all I can say for the time being. Although other markets look like they could be, especially in Europe. We'll go on to that in a minute. Actually, before I move on, I should just point out, this looks like a really nice channel, assuming it holds. There we go. Now, we've held the lower trend line. We've held the low. These two trend lines, the top one here and the bottom one here, obviously have created a channel. Now we held, even though we spiked below, we held on a closing basis, a daily closing basis, and of course a weekly closing basis on Friday. We did hold because we spiked up from 26.25. Now I do think I had 26.25, 26.24 was a big support level, and we certainly bounced off there. I would have got that from that weekly trend line that I showed you before. So for that reason, I do think that we can recover a little bit. We'll have to see how far we can get. Could we rally another 100 points? We certainly could. We certainly could get up to the 27, 65, 70 area, which should be strong resistance. Now, we start holding below 26.45, which is the trend line support. Then we're going to retest that 26.25, 26.25 area anyway. That's also going to be important. Those are the big levels. They're on the report, so don't worry about it. You don't have to note them down. Just read the report. But for that reason, I do think we could get a bit of a recovery in the E-mini, short term in the E-mini S&P. E-mini Dow Jones has managed to hold above what should be a good support level for pretty much the same reasons as the S&P. There we go. Down here at 24,230, 24,180. That's a good support level. We bounced way above there now, so maybe a little recovery back up to this trend line around 25,100, 25,150. That will be your first resistance level to look for. That support level is actually a lot clearer on the weekly chart, so I'll show you that. 24,230 down to 24,180, 170, as I said. Doesn't look so far away in the weekly chart, does it? So we bounced right off there, so as I say, potentially a recovery in the short term. And if we do go lower, just watch that area. There's not really anything more important this week than that area as we start to get oversold. Not very oversold yet. Right, DAX is a bit more interesting. The DAX broke this very important support level where we have the green, thick green, so it's nice and clear, neckline to the head and shoulders pattern, and the 200-week moving average. Now, we collapsed towards my target of 11,000, which I said was very strong support. We got down as far as 11,035, so that strong support level certainly has worked. I do think it is worth buying into longs. I do think I talked about this in my last video. We've got support then around 10,800, 10,850 from this little cluster of resistance which we found at the end of 2016. So we will need to hold above there, or things get nasty again. Now I think things will get nasty again. I think we will break lower, but my best bet is we bounce off that 11,000 area, head back to 11,450, 550. I've got a sell level at 11,500, 11,550, and then reverse. You usually do get, well, you often get a retest of the neckline to the head and shoulders to give you a chance to get back in. Don't rule out a spike above it and then collapse. This is a particularly volatile market, and the big boys will be trying to push this just to get the little boys out. So try and hold your nerve and see if we can sell up around there, and then eventually see a collapse below 11,000 and further moves to the downside, because this certainly does look negative, and I do eventually think we are going to get a significant correction, maybe a crash. The Euro Stoxx is already testing these peaks that we have from 2016 around the 3080 area. Now, where did we get to on Friday? Oh, we got 3080. Okay, so you can see that I'd already put this line in there at 3080, which I kind of think intersected the bodies and the wicks quite nicely. So I had 3100, 3180 as support. Now that's held. So again, I think good reason in the short term for the Euro Stoxx to have a little bounce. We are going to have some trouble around the 3150, 3160 area. So maybe that would be the area that you want to be selling, and then eventually looking for a break below 3080. Anyway, the rest of the levels are on the report, but that's my thought. Short-term bounce, ease some oversold conditions. Let's have a look at that daily chart, actually. Yeah, we've been oversold for a while, so a little bounce would be nice. And clearly, yeah, 3170, 3180 is obviously a good level. You can just eyeball that level quite clearly there, can't you? FTSE, tricky on Friday. We have the 200-day, 200-week moving average support around the 69.20 area, and then we've got this trend line going back to the end of 2016, which comes in around 68.95. So that was our support level, and it worked really well for most of the week. And then we just blipped below it on Friday. Now, this is showing a close of 68.75. That's not actually right. I'm looking at the short-term charts. We closed at 69.12. So we actually closed above that trend line. Now, I said in the report we need a weekly close below the trend line to confirm further losses. We didn't get it. We got the spike down, not quite as far as the low that we've already seen in 2018. And anyway, the close above the trend line. So can we get back above 69.20 on Monday morning and start a recovery? I think we can. I think we can. I think we probably flushed out some shorts there that didn't want to run the position over the weekend. And then we can see a little recovery. Again, probably not the start of a new bull market, but a decent recovery for a selling opportunity. I've got all my fib levels on there, and you can see the first big fib level is around 70, 70, 70, 80, where we had some price action backing up that level. So that will be the first major test on any bounce. If we got back up to 72, 25, 72, 72, 35, that's obviously a big resistance level. And by the time we get there, the 55-day moving average will be adding extra weight to that area. Okay, thanks for watching. That's the end of part 3. Email me with any questions that you have. I hope this market starts to get a little bit more clarity, especially in the Forex markets as we head into November, and we can get a little trend to run for a month or so before Christmas. That would be a treat. We'll have to watch the dollar index for that.